Today we wanted to talk about comparing investment on the single family home respect to the other vehicle of investment such as stocks or bonds.
Right, so former econ teacher, so I was super excited when we said we were going to do a video on talking about investments. We don't do enough videos on investments, to be entirely honest. So real estate, single family homes, townhomes, condos can be a hedge against inflation. A lot of people we've had a lot of investors understand that it's a hedge against inflation. They put their money in homes for a reason, because not everybody wants to be in the stock market game or the bond game, even though those are great vehicles as well. But we're going to really dive into how a portfolio should honestly have all three measures. So we're going to talk about metrics and measures, but having homes as well as stocks and bonds really is a great portfolio.
Exactly. That's what we wanted to talk about. All this matrix which is really crucial for assessing your performance and potential for various investment in your portfolio and option, and basically comparing this investing in real estate, single family home specifically, to stocks and bonds. And we look at several key indicators in this matter.
Now, the one that people are going to hedge against the most, of course, is going to be cash flow. Cash flow is important, especially when we're talking about stocks, right? Let me go into a single family home. Cash flow with the property, you're going to have your rent minus all your expenses, taxes, mortgage payments, insurance, things of that. Stocks, you are going to get some dividends from it, so that's going to help you buy more, which is going to increase your cash flow, as well as whatever the price is. You bought it at one price and it goes to another, that there is cash flow if you sell it as well.
Exactly. The next thing that we wanted to talk about really is the capital appreciation, that increasing the value of the asset over the time. Of course, single family home property appreciation is when the housing depends on demand and supply is steadily the last 40 years appreciated over the time. And
now, not every property is going to appreciate over time as well, because if you don't take care of a property and you only let it depreciate in value, then that's not good for the home. But generally speaking, as long as you take good care of a home, you're going to get a good appreciation value of it. So I want to say there is some physical hands-on work for capital appreciation when it comes to single family homes. You can't just let people destroy. I'm getting there. Stocks we talked about it. The second prices increase on that stock. You bought it at 12, it's now $12.50, you made 50 cents. There is a price increase, there's capital appreciation there as well. Bonds have a little bit less, since they are typically a fixed income instrument. So you put your money into a bond at 5%, you're going to get a 5% return, whereas maybe you would have bought somewhere else and you could have gotten an 8 or 9% based on stocks, based on appreciation. But bonds still appreciate, they're just more steady and fixed.
Exactly. Before we jump to the more data information, wanted to do our introduction.
Let's hit it. Hi, it's Alan Victoria. Welcome to our channel and podcast.
And if this is your first time in our podcast and YouTube channel, make sure you subscribe and get notified.
Also, you can call text all the time, 252-327-3357. We love talking to you. Don't be shy. Also, grab our buyer's guide and seller's guide in the description below. Now, what's my next topic?
Next topic, we wanted to talk about leverage.
Yes.
Basically is using borrowing the capital to increase the potential return on your investment. What it means in an economy.
Now, for homes, single family homes, townhomes, condos, investors will typically leverage their cash by using a mortgage, right? So they're going to have somebody else front the money, and they're just going to use the money to buy the home, and they're going to have a payback value. Stocks can be purchased on the margin, usually with borrowed funds, and bonds can be, again, that's a little bit dangerous, but it can be done. And bonds can be leveraged by institutions like our government, our facilities that buy from the government. But those strategies all come with a higher risk. So there is a lot of risk involved with those stocks buying on the margin, and especially when you're using borrowed money, bonds, when you have to go through institutions. But a home, as long as you can prove that the mortgage is lower than the rent, you can see what there is leveraging there.
Exactly. And the next thing is liquidity. Basically, we wanted to see how easy it is to convert this investment to cash without affecting the market price? And what is about the stocks, bond, and the real estate?
Just so we're clear, liquidity is based on water. How fast can this water be shifted around? Now, water moves fast, right? So you can move water instantaneously. If it's not moving instantaneously and it's more like a molasses, this is a slow. It's not as liquid. So stocks are super fast, super liquid. You can sell stocks the second you buy it, honestly. You can sell it within seconds. Bonds are to vary depending over time, market conditions, the rules of the bond, but homes, single-family townhomes, condos, they do have lower liquidity because you do have to take in at least real estate time, the process of selling the real estate, the cost of selling the real estate, so it's a little bit more slower. However, that doesn't mean that can't be done. It's just going to take, at least in our market, 30 days.
Exactly. The next thing that is important is volatility, which is a measure of the degree of variation of the trading price over the time. And what is the highly volatile?
Well, stocks, of course. Stocks are highly volatile for this reason. We all heard of the stock market crash of 1929, right, which happened in an instant. People killed themselves over the thing. Don't do that, by the way. Just you're going to survive. Even if the worst happens, you're going to be okay. So anyway, stocks are known for ups and downs, going up and down, high volatility. It's happened many times in history. Bonds are a little less volatile because, again, there's market conditions, there's government institutions behind it. And single-family homes have a lower volatility because real estate typically doesn't move as fast as the stock market. Many people will say they're going to park their money in an investment like property for a reason because they know there's less volatility there, and that's always a good thing.
Exactly. The next one is a tax treatment. No, that is another important factor for investors. That, for example, for single-family home or townhouse or any kind of real estate investment, they can offer tax advantage through what? Depreciation. What else?
Capital gains via mechanisms like your 1031 exchange.
Exactly.
Whereas on the other side of it, stocks and bonds are subject to capital gains taxes and taxes on dividends and interest income. So you are paying taxes on those stocks and bonds. So know what that is.
Exactly. Now, the next thing that we wanted to talk about is diversification, which is a strategy for many investors to spread.
Sorry, before you go into that, taxes, I should have mentioned Roth IRAs, where you're paying taxes at the beginning, but you're not paying taxes at the end. I should have put that in with the taxes as well. Sorry, diversification. You want to talk to me about that?
Diversification basically is a strategy that many investors are using to spreading their investment across the different asset classes to reduce the risk. No?
Right.
What is examples that we can do that?
Well, typically people will buy stocks, they'll buy bonds, and they'll buy real estate. So real estate typically has a lower performance than the stock market. But by parking your money in an asset that is appreciating in value, you're going to be saving money over time. In the long run, it's just not going to be as moving and seen. So it's not as liquid. But you still definitely own this because it's diversified into various things like your home.
Exactly. Beside the diversification, the next thing that we wanted to talk is about inflation hedging, which is protection about in the loss of the purchasing power due to the inflation. No?
Yes, I actually had a couple clients in the last year, even though interest rates were 8%, they were looking to hedge against inflation. This is a normal thing. So people will buy a home when inflation isn't really a problem. People are getting appreciation. Homes typically are a hedge against appreciation because it's a fixed value, right? It's a fixed rate you're paying on the mortgage typically. So you're not going to have those hedge funds coming. Inflation hedges, you're not going to have a worry about inflation. If you're already a homeowner, this is really why your home is increased in value and why your own net worth is increased in value for nothing else other than you bought the home and then 2023 happened with crazy inflation. And then so therefore you're feeling you have more money in your pocket. So you're in a different situation than somebody who didn't buy a home before 2023. The same is true with investment. Bonds can be negatively affected by inflation. Stock markets can crash, as we talked about, and they won't hold up their value. But property values typically hold their property and appreciate with investment because people still need a place to live, whereas stocks are going to a little bit, but not as much. But bonds are bad for inflation.
And inflation definitely is going to affect the rental market, makes the rental market usually hotter, which is going to give more leverage and money for the investor that they have property.
So if you want to talk more about economics and stocks and funds and all of this fun stuff, including buying your home and real estate, I'd love to talk to you about buying a home or selling your home or looking to put that home to get some more appreciation for you. I'd love to do that. So let's talk.
Because we are a real estate agent in Greenville and Winterville, North Carolina. We'd love to help you. Don't forget to call us at 252-327-3357. Thank you.